Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to sit down this afternoon and shoot an update video because today was the yearly close for the US stock market. It will not be open tomorrow, obviously being a weekend. It will not reopen until Tuesday. So I want to talk about this yearly candle. Also want to talk about some strategies that you may decide to employ if you're somebody who maybe got caught with your hand in the cookie jar, you're holding some stocks or some assets that you don't necessarily want to hold because you're worried about them going down further, but you also don't want to sell them for a loss. So I'm going to talk about some things you can do to help offset some of your losses. Before I jump into the content for the video, please do me a huge favor, hit that thumbs up button, subscribe to the channel, and make sure to leave me a comment and let me know what you think. So first things first, let's talk about this QQQ chart. The QQQ is an ETF for the NASDAQ. Essentially, it launched back in 2002. Well, it said 2002 when I Googled it, actually. I was curious when it launched, but this chart goes back to 99, so I don't know what the discrepancy is. But essentially, this big candle here, this is a log chart now. This was about a 39% drop, and then this kicked off the bear market, the 2000.com bubble, where there's three really, really brutal years for tech stocks. And when it was all said and done, of course, from top to bottom, they fell over 83%. So a little concerned that we're seeing the beginning of the same type of thing, that we may actually have, a 3-year period where this market corrects itself. And I talked about this on social media last year, and I stumbled across the post yesterday when I was cleaning up my old Discord server, and where I was talking about, when a parabola breaks, it's textbook behavior for a market to retrace 80%. That doesn't mean it goes down 80%. It means that it takes back 80% of the move. So if we put the Fibonacci levels on here, an 80% retracement will be down around $100 for a QQQ share. And it's really, really interesting because guess what? That's right around that old high back here, from 2000. So retesting old highs is pretty standard market behavior as well. If we put it on a log chart, then it's even lower. I wouldn't think we're going to go that low. That seemed a little far-fetched to me, but I guess anything is possible. I mean, maybe 89% drop, highly unlikely, but again, anything is possible. This other one, if it was to go back down, be about a 75% drop, which is more in line with, like the previous bear market type of stuff. Also keep in mind that this candlestick is very bearish. Just the candlestick itself, it's a fairly full-bodied candle. There's not a lot of tail, was not a lot of pushback from the bulls this year. And on top of that, it's actually, if you're looking at it from open and closes, it's actually an engulfing candle, meaning it's a bearish engulfing candle on a yearly candlestick chart. And that's not good. It's not the end of the world. It doesn't necessarily mean that it has to keep going down. We had a similar candle back here, but the difference being this was after a bottom, this was ranging and then starting to break out. This was accumulation down here, whereas this is after a huge run up. Very likely this is probably going to end up being something more like this. I would say, just kind of as a caveat, I think that the year will start off on a high note. I think it will probably try to move up when the market opens next week. I just don't think it'll work. I think it'll end up failing. Kind of like back here, you can see it did try to move up. Opened here, moved up about 18%, and then ultimately failed. I suspect we may see something like that again. That creates liquidity for players that are bearish. If they can get retail to FOMO into positions and push the market up, they'll be buying right into the big money shorting. Okay. Again, volume is suspicious. You have a very large selling candle here, whereas no candle in the last several years, last decade really, had anywhere near that level of volume. Right, you're going to have to go all the way back to 2011 before we see that type of volume. So that's indicative of a market top. It's kind of igniting volume, if you will. It's not the bottom of a move where it's going to be signaling an end to the move. It's really just getting started. Reminds me of this volume back here jumped up and then just continued to increase until we got the final capitulation candle way over here. So if you're looking for a bottom capitulation candles, like big outliers like this, they tend to be really good places to look for positions. Okay, so let's talk about what happens if you're in a trade or in a position that you maybe liked at the time, but now you're not so fond of it and you just don't know what to do. I'm going to use Meta as an example because I know somebody that got caught with their hand in the cookie jar in this one. They bought around $190. So I believe he's in at like 190. So his cost average is up around here. He's got a fairly large position because he has quite a bit of money in the market. And so what I'm going to talk to him about is selling calls. Okay. If you go look at calls, if you can, if you have over 100 shares of a stock, you can sell what's called a covered call. And a covered call is kind of nice because if the market keeps going down, yeah, you're losing money from holding the stock, but you're going to hold it anyway, if that's your plan. And the covered call, the premium just kind of helps offset some of that loss. So if I go over to Robinhood, which is one of the easier interfaces to look at options on, and I look at calls, for example, I might say, hey, I think this is a bear market. I think Meta is going to continue going down for the next year or two. I could sell a call. I might say, hey, I'll sell this 125 call for $31.10. Now, options are in lots of 100 shares, so 3110 is actually $3,100, $3,100. But you think about that, if the stock ends up going back up and this call gets executed, what would happen is this person would have to sell their shares at 125. They get to keep the 31 plus the 125, so they'd end up getting out at around 156. Still a really big loss from 190. That wouldn't be ideal. But it is a possibility that might happen. However, it keeps going down. If they're just sitting there holding it, hoping it goes back up someday, every dollar it goes down, they're losing money, losing money, losing money. If it does keep going down before it bottoms and they sell this call, then they get to keep this $31. Let's say that Facebook goes down to $100, just a nice round number. Sure, they lose $25, but they get to keep the 31, so they're actually better off for selling that call. It helps offset some of those losses. And by the way, this isn't just a strategy for positions that you might be upside down on. You can actually create passive income streams. This is one of the things that I actually do is I have certain stocks that I bought with the sole intent of selling covered calls on them. And I sell covered calls again and again and again and again, and I just use them as passive income. I always try to put the calls just outside of where I think price might get to so that they never get exercised, and then they expire worthless. I get to keep the premium, and then I sell them again and sell them again. And at this point, those stocks that I've done that with, like they're, for lack of a better term, they're free to me because I've already made more money on the calls than when I paid for the stocks. So it leaves me in a really good position. But yeah, if you have shares of stock and you have more than 100 shares, you might consider, I'm not telling you that you should, it depends on your own financial situation and what your plans are. But if you're planning on holding anyway, and you're not holding because you love it, you're just holding because you hope it goes back up, you may be able to sell covered calls and help to offset some of those losses. And maybe you're not in such a bad way. Like, being in at 190 and then price falling down, another 50%, that's really rough. Maybe you bought Facebook around 150 and you're down. Well, you could sell those covered calls and, if it did go back up, you'd actually be able to get out for at least even kind of thing. So keep that in mind. It's a really simple strategy. Just the key being never sell naked calls, right? Selling naked calls is a great way to go bankrupt and get yourself in major, major trouble. Fortunately, most platforms will not let you sell naked calls. If you don't know what that is, don't worry about it. Just you probably wouldn't be doing it anyway. If you're selling calls, you want to make sure you own the underlying stock so that you have the collateral available if price suddenly went nuts. You wouldn't want to be in a position where you had to buy the stock. So I want to talk about that. I want to talk about that yearly candlestick chart. As far as cryptocurrency goes, remember that cryptocurrency, in my humble opinion, is just another tech stock. Bitcoin specifically, just another tech stock. And then all the little altcoins follow Bitcoin. So it's like Bitcoin follows the QQQ and the tech stocks, and the alts follow Bitcoin. It's like, just the tail wagging from the dog, so to speak. So as long as the stock market is in rough shape, I would expect that this year is going to be a rough year for Bitcoin as well. And I know that a lot of people are still clinging to this hope that, this time is like every other time before, that it's a 4-year cycle and that, 2023 is going to be the start of a new bull market, all that kind of stuff. Anything is possible, from a technical analysis point of view. Of course, this could simply be coming back down to retest this old high, and maybe it does accumulate there and move back up. So you should be open to that possibility, but you should also be aware that the reality is very simple. Bitcoin has only existed during a global, bull market in equities. And so now that equities are not in a bull market, we really don't know how Bitcoin is going to act. It stands to reason that there's a high correlation between Bitcoin and the tech stocks. And if the tech stocks are doing very poorly, especially if they do have a 3-year bear market like what happened after the dot-com bubble, then it stands to reason that Bitcoin itself is probably going to struggle for a couple of years as well. Now, there's good and bad to that, and I don't want to go too deep into this, but the good is this. If you're a Bitcoin believer, that could give you an opportunity to accumulate Bitcoin at a very affordable rate. If you're a Bitcoin hater, then you obviously don't care about that. But also, for those of you that are Bitcoin believers, keep in mind, this is very important that you understand this. Technology tends to be replaced by a better mousetrap. That's always been the case. When a new innovative technology comes out, once it reaches a point where it's, I don't want to say mass adoption, but fairly close to mass adoption. At this point, I'd say more than half the people on Earth have at least heard of Bitcoin. Probably a quarter of people on Earth have owned Bitcoin at some point even. There's probably statistics out there you can Google on that. But what happens is you suddenly get a whole new slew of bright minds into the space. And there's now a lot of people looking to build a better mousetrap. And I have believed for the last few years, I've talked about this in the past, and I still firmly believe that Bitcoin is the AOL of cryptocurrency. AOL was a huge company. If you grew up when I did, everybody had AOL. Well, everybody that was using computers, just like Netscape. When you get on the internet back when I was in school, we didn't have computers at our school for the longest time. But then when we got the internet, like after school, I would go down to the library. There was 2 computers at our local library, a town of about 10,000 people. It's a small town. You have to go down there and you'd have to rent like 30 minutes of time on the computer. It was Netscape. Everything was Netscape. There was no, Internet Explorer or anything like that. Netscape was it. And of course, nowadays, if you talk to somebody like my daughter who's a teenager, she doesn't even know what Netscape is, because Netscape was replaced by, I won't say a better mousetrap, because there was actually some lawsuits over all this, the way Microsoft did them dirty, but a different mousetrap replaced them. And I think that that's what we're going to see with Bitcoin. I really believe that Bitcoin will be replaced by a better technology. I don't know what technology that is. I don't know if it's a coin that currently exists. I don't know if it's a coin that's yet to be invented, but I do believe that's going to happen. The other thing that I would say is be very aware of, what happens in these cycles. I was unfortunately somebody that, held out a little bit too much hope in some ways. I held on to a lot of alts that I bought in 2017. I don't want to say a lot, like money wise, but a lot of the alts, I had like 40 alts. A lot of those I did hold on to some portion of, kind of as a lottery ticket. I talked about this in the past. I always kept a little bit of crypto just in case I was wrong. But they just did not perform well in this bull market. You look at EOS, for example, this looks like it did well, $15. But if you go back in time, EOS was higher than that in 2017. It just never happened. I remember doing a video about EOS when this pump occurred. I said, I'm probably going to regret not selling all of my EOS right here, because this is a retest of the 61.8. It's probably going to end up being a hodler soul crushing zone, and I'm probably going to look back and kick myself later. Well, I did. OMG was another one of the alts that I held on to. It came up last year, hit that golden block, and then absolutely collapsed. It's now down like 95% from its 2021 highs. But again, you'll notice that in this cycle, it never did get back to those all-time highs from 2018. I think we're going to see a lot of the same behavior in some of these darlings of this cycle. People have bought them, they're bag holding them, they think, it'll go back up eventually. It'll eventually go back to its old all-time high and then go even higher. I don't think so. I think a lot of those alts are probably going to be old news. I think if we do get another bull market, which is not guaranteed, but if we do, I think you'll see new alts come out, and those new alts are probably going to steal a lot of the limelight, just like what happened in this cycle. Like if you look at ADA, right? ADA had an amazing run. It actually did surpass its 2018 high, but now look at it. It's down, 95% at least. 92% on ADA. Then you had coins like Solana, whatever you say that. These were the coins that were supposedly going to, replace Bitcoin and all that kind of stuff. Down almost 97%. You have coins like, Shiba had a lot of, people just going bonkers over it, which never made any sense to me. I hated Shiba. I did videos about Shiba, talking about, shorting Shiba. I remember doing a video in November of 2021, and somebody that loved Shiba, getting super nasty with me in my Facebook group. And, that was back around here, So Shiba is now down, what, over 90%. You know, you just have these little projects. They're basically meme coins, right? That's what happens. And so if we do get another cycle, I would just be on the lookout for new memes. I'm not saying you should invest in memes. I think it's dumb to invest in them long term. But look, whether you like Shiba, whether you believe in Shiba, whether Shiba is a joke or a real or a scam or whatever, reality remains that if you bought Shiba down here and sold over here somewhere, you're very happy and you probably like Shiba a whole lot. So the key is just really don't fall in love with it. Don't do, what I did with EOS. Don't do what I did with OMG. Don't give back, lots of money to the market just because you're up big. I did the same thing on Verge. The first year I was trading, I took Verge, I bought $500 worth of it, turned it into $30,000, and then gave it all back and then some because I refused to accept that it was, a turd. Essentially what I did was I bought it around, half cent. I sold it up around 30 cents, which was right near the top. But then I had a lot of people chirping in my ear about how it was going to be $1, $2, $5 someday. And I got super nervous and super anxious. I'd only been trading for like 6 months. And I put all that money back in. I bought it back at like 16 or 17 cents. And I was like, oh, I'm so smart. I got twice as much Verge. Look at me. I'm such a genius. Well, if you buy something at 17 cents and then it goes down to 1/10 of a cent, you lose all your money. It doesn't matter that you bought it back half of what you could have, half what you sold it for. If it goes down to 99%, you still lose everything. And a lot of people are learning that lesson the hard way in the stock market and crypto. They're thinking, well, I bought something that was down 50%. Look how smart I am. You're not smart. You're not smart. Just blindly buying because something is down doesn't make a lot of sense. If you bought something up here, and you're holding it, you're down about 91%, 90%. Okay. If you waited till it fell 50% down in this ballpark and you're still holding, well, guess what? You're still down about 81%. There's almost no difference. If it keeps going down, whether you buy it at the top or halfway down or a quarter of the way down, etc., there's almost no mathematical difference. You still end up losing most, if not all of your money in the long run. All right, so make sure that if you are trying to pick assets, whether it's stocks or cryptocurrency, if you're trying to pick assets that you want to invest in, make sure that you have a legitimate reason to invest in it, some kind of strong underlying fundamentals, the true fundamentals, not hype. When I say hype, you have so many cryptocurrencies that have white papers that promise all these things, but they don't actually have anything. It's just like the dot-com bubble. Somebody could throw up a website and have an idea that was good enough to get money invested. Whereas the reality is they never actually had a working product. So make sure that you're investing in stuff that has strong fundamentals, or you have a strong technical analysis reason for investing. And there's something in the chart that says to you, hey, this is probably a bottom. This is probably going to be a good long-term investment. Okay, if you do that, I think you will survive this bear market. And I think you could even come out in really good shape. 2022 was actually one of my best years ever financially. I was a little tighter than what I should have been, a little bit more risk adverse than I should have been. I should have really, went guns a-blazing with some of my hardcore bearish beliefs. A lot of the shorts that I took, I closed too soon. A lot of the puts that I took, I didn't get overly aggressive with. So I certainly could have made more money than I did, but it was a really, really, really good year for me, even when the market was bleeding out. And the reality is 2023 can be a really good year for you if you will just trade it and don't date it. All right. And yes, I stole that saying. I didn't come up with that. But it's good. It's a good cliche, right? Don't fall in love with your assets. Don't fall in love with your trades. Make sure that you are using logic and common sense. And my, heartfelt suggestion would be try to avoid social media, at least social media when it comes to cryptocurrency and trading, because all you get there is echo chambers, right? You get a big bullish echo chamber no matter what's going on in the market. And I see so many of these guys. I've done a really good job. I basically took a hiatus from social media. I've only been on Twitter maybe like 20 minutes the entire month of December. But even when I'm on there for just a few minutes, I still see these big accounts, trying to pat themselves in the back, pretending that they called all these things, pretending that they saw this bear market coming. But the reality is I saw them last year screaming about $100,000 Bitcoin, $200,000 Bitcoin, $1 million Bitcoin. I saw them screaming about all these, ridiculous bullish theories, the wave theory, I'm not going to call anybody out by name, but, the wave's going to take it to 250,000. It can't do this. It can't go that low. All the people saying it can't go under, 10,000. It can't go under 20,000 because the cost to produce is higher than that. It's all nonsense. They just don't understand how any of this stuff works. Just as an example, I had somebody that supposedly wrote a college paper on mining Bitcoin, and this was something they did their thesis on, and they would try to explain to me why Bitcoin could never go under $6,000 again. This was in 2019. And I said, look, you don't understand how this works, because as Bitcoin's price drops, miners will turn off their miners, the difficulty gets adjusted, and the cost to produce Bitcoin actually goes down, because there's less competition for that Bitcoin. They argued with me, but of course, in the end, I was right. It went under 6,000, went down to 3,800. And people are doing the same thing now. They're saying it can't go to XYZ level because of the mining costs and the production costs. Look, production cost changes. It's not a static variable. It changes based on the difficulty to mine Bitcoin, based on electricity costs of where it's being mined at, based on whether it's somebody mining in their basement at home on a residential rate, based on whether it's being produced, somewhere on hydropower for 2 cents a kilowatt hour, based on whether it's somebody that's, made a huge investment, set up a massive solar farm. Now they're mining off of solar, expecting a return in 5, 10, 15 years. There's so many things that go into that it's just a ridiculous idea that it can't do this or it can't do that. If that was the case, people with big money would just go in there and sell puts for that price, infinite number of puts, because they would know that it would be impossible for them to lose money on those puts. You don't see people doing that for a very good reason, because Bitcoin can quite literally go to zero. There is nothing that says it can't go to zero. I don't think it will, but anything is possible. So any money that you have in this market, you need to be really aware of what is and isn't possible, and really just stick to logic and stick to charts and fundamentals, and try to leave emotion out of it the best you can. I'm not perfect. Again, I make mistakes. It's one of the reasons I shared the EOS mistake and the OMG mistake, because I did let my emotion get the best of me on those, and it was a costly mistake. Those 2 coins I lost a lot of money on. But you don't have to be perfect. You can just, get better every year. 2023 will be the 6th year that I'm trading. And it's wild to me how differently I view the markets and how different my actions every day are compared to where they were 5 or 6 years ago. Less than 6 years ago, I didn't know how to read a candlestick chart. I literally did not know what the candlesticks meant. I didn't know why they were green and red. I didn't have any idea what I was looking at. I remember when I first saw one, I thought green meant it was supposed to probably go up, and red meant it was probably supposed to go down. Like I thought it was like telling me what might happen next, like a probability thing. I had no idea. And 5.5 years later, like my life is drastically different. And quite frankly, it shouldn't have taken me this long. It's just I was stupid in 2018. I played the bear market all wrong. I lost a lot of money, multiple 6 figures, and I set myself back. 2019 was basically just an exercise in breaking even, like getting the money back that I lost. Had I not had 2018, had I not done the dumb stuff in that year, then 2019 I could have set myself up in a big way. In 2020 through 2021, I could have set my kids, up for life, which unfortunately I did not do yet. So anyway, this is a year-end video. That's what I see. Like I said, make sure you're playing it safe. Also, if you are underwater in some things, take a look at some calls, make your own decisions. I'm not telling you should or shouldn't do it. I'm just pointing out it is a possibility to help offset some of the risk and some of the losses that you may have incurred. All right, all that being said, please remember I am just some guy sitting in a spare bedroom. Obviously, nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Give the video a thumbs up, subscribe to the channel, and make sure to leave me a comment. Let me know what you think. I'll talk to you soon.